Hey everyone, it's James from Cruzel Insurance. Hey, I wanted to put out a video that helps people understand health insurance better. According to the Kaiser Family Foundation and the Motley Fool, medical debt is the number one reason for personal bankruptcy in the United States. Over 1 in 4 adults in the United States struggle to pay their medical bills. So, it's important to understand the main purpose of health insurance. It is to protect your family from a catastrophic medically related event. Now, you would think, with such a broad and gigantic problem in the United States, this would be a primary concern with adults, right? But what I've found is actually quite the opposite. After speaking with hundreds of families each week about health insurance, I've come to realize that part of the problem is that many people don't understand how health insurance works. Even if they do know how it works, most people, when questioned, can't tell me about the specific type of health insurance that they currently have. Okay, can I just say that anytime you are paying thousands of dollars a year into something that you don't understand, this is a problem. Okay, so I'm going to try to help explain some of the components of health insurance to my friends and family. And I want to begin with discussing the dreadful deductible and the cash copays. The deductible is the amount that you have to pay on your health bills before the insurance company agrees to pay anything on your behalf. This is the most basic type of health insurance and is all anyone really needs. Okay, I can pay for the small health bills and the insurance company will pay for anything major. Here's an example. Tom is 55 years old and has a $1,000 per year deductible. He's healthy, and for the first 8 months, the only health bill he had was a doctor's wellness visit, which was $100 that he had to pay out of pocket because he had not yet met his $1,000 deductible. Okay, so here's the $1,000 deductible, and he paid into it this far, $100. But in the 8th month, he fell off a ladder, breaking a bone in his arm. The medical bills would eventually total $2,000 for that injury and recovery. Now, he still had to pay $900 out of pocket to meet his full deductible. But the rest of his medical bills after that, it would be $1,100 more, would be paid for by the insurance company. Okay, then any medical bills for the rest of that year would also be paid in full by the insurance company. Now, in this example, a $1,000 per year deductible would be considered a pretty low deductible today. If you choose to take a lower deductible like that one, you'll likely pay more because the insurance will start paying earlier. Now, if you wanted to save some money, you could take a higher deductible. Remember that the main purpose of insurance is to protect you from catastrophic events. So, your deductible should always be determined based upon the amount of money you have in your emergency fund. Now, let's say that you don't want to wait for your deductible to be met to pay for some of the small things like doctor's visits and prescriptions. Well, you can choose to pay more for copays, which are fixed dollar amounts that you pay when you use those services. So, in our example earlier, if Tom's health plan would have had copays for doctor's visits, he might have paid only $20 for that early office visit, and the insurance company would have paid the remaining $80, even though he did not yet meet his deductible. Many times, copays give the covered person security and a feeling like they're getting something out of their insurance. But remember that sometimes it can be much more expensive on your monthly premium to add copays as a feature. Hopefully this helps you guys understand health insurance a little bit more. And remember Proverbs 15:22, without counsel, plans fail, but with many advisors, they succeed. Thanks for watching. Hey, if you would like me to do another video on a specific topic related to health insurance, go ahead and ask me in the comments below and I'll try to get that video.